What's going on, guys? My name is Richard, and welcome to this week's weekly trade summary. So overall, I'll go through my trades from this past week, and if you do enjoy my analysis, please go ahead and leave a like down below and subscribe if you're new to the channel, and let's dive right in. So overall, this week was probably my worst of the year, but it's very important to keep things in perspective because even though this was a pretty bad week, this has been a fantastic year for growth stock trading. And with the Livongos, the Neos, the Teslas, you're going to have some drops like we experienced on this Monday. And in general, there are kind of two different buckets of losses. You've got your controlled losses, your regular stop loss hits that are hopefully under 5%. And then you have some potential for uncontrolled losses, gap downs due to earnings or news of a vaccine. And those you can't really plan for. But you should try to mitigate those based on position sizing and overall risk management by thinking about the overall market conditions. And this Monday, when the news of the vaccine came out, was a great example of a lot of uncontrolled losses because you had all the stocks that benefited from work from home got hit very, very hard. And I'm sure if you're a growth investor or growth trader, you experienced that in your own account. But anyway, diving into the video, I'll kind of talk through each of my trades from the past week and kind of explain my methodology, when I sold and why, and also kind of some things that looking back on these trades, I should kind of look at before potentially taking these trades. So starting with my two biggest losers, we've got ZM and PTON, and these were huge gap downs. You can see that on Peloton, it was down about 15%. And my plan going into it, because I saw this happening in pre-market, was to watch the first few minutes of action and then based on that initial response to the gap down, whether it finds support at the 50-day, to decide whether to hold on for a little bit more or sell it outright. And basically on Peloton, I watched the first few minutes of action. Let's go to a 5-minute chart here. And it didn't look good, so I sold at 104.69 for a pretty big loss. But overall, I save myself a lot of volatility in the coming days. And at this moment, it's still a no touch for me because of some negative action here below the 50-day moving average. So I'm completely fine with how I traded Peloton. I stuck to my rules for big gap downs. And basically, I did have a larger loss than expected, but I kept my cool and was very calm about my decision process. And this is extremely important when you have a big gap down. You want to make sure that you're in touch with how you're feeling and making sure that whatever you do, it's objective and is in the best interest of preserving your capital for the long run. So that is Peloton, and that's how I dealt with this huge gap down. And right now the stock chart looks a little bit broken because of this big gap and because it's below that key 50-day moving average. And if we go to a weekly chart, you can see that it is pretty high volume. And although we do have a nice reversal here, it's still below that key 10-week average. So that is Peloton. And next up, we've got ZM, which also had that same gap down and is now below that 10-week. And let's talk through how I did this. So basically, I entered off the bounce off the 50-day moving average late last week. And overall, you can see it had another big gap down. Let's see how much this was here, down about 13%. And I basically dealt with it the exact same way I did with Peloton, although I was a little bit slower to react on this first bar. And I sold it at 418, which unfortunately was nearest the lows of the day. But at that time, you don't know how far it's going to drop. And overall, once again, I'm completely fine with how I traded this and dealt with that gap down because I was objective and calm about my decisions. And overall, looking back on these two trades, one thing I should have been looking at was the RS line because you can see it's decreasing here, actually undercuts its 21 EMA here before bouncing at the 50-day moving average. And you can see the RS line had a pretty weak bounce here. So that could have been one thing I'm watching. The RS line was pretty much going flat or down when I bought it off the bounce. If we go back to Peloton, once again, it was decreasing at that point when I bought it. So that's one thing I'll be looking at in the future. And actually on my buys this week, which we'll talk about later, the RS line is decreasing. So once again, I'll be watching to see how these trades end up. But overall, that is how I played Zoom and Peloton, which were both uncontrolled losses. And these type of losses definitely hurt, but it's a good thing that I didn't have full positions at the time. And overall, once again, it's very important to keep things in perspective. And overall, in terms of year-to-date performance, these didn't impact it that much. So moving on, let's talk about Fiverr and bringing up the chart. You can see I bought late last week, and then I sold in 2 chunks at 170.65, and then the rest at 164.44, which was my moved up stop loss. So overall, once again, you don't know how this bar is going to turn out, and I followed my rules. And overall, when the stock hit my stop loss, I got out. And overall, Fiverr does look much better than Peloton and Zoom. You don't have that huge gap down, although it is a little bit volatile and V-shaped here. But if we go to a weekly chart, you can see it's a nice reversal bar off that 10-week moving average. So doesn't look too bad on a daily chart. But overall, at this point, I'm not in it at this time. So next up, we've got Airy, and overall, this was a normal stop loss hit, which is unfortunate, although you can see it's still decreasing and pulling back to that kind of key 38 level, which it's been finding support at recently. So overall, tightening up a little bit on the right-hand side, and I'll be watching this very closely. It's very promising, great sales and earnings growth the past 3 quarters. So there's definitely one that's still on my radar. So next up, we've got Snap, and overall, I sold this for 2 normal stop loss hits on this Monday here, and then I got back in on this Thursday as it was a teal dot and it took out the high of this inside day. So overall, this is holding up very well relative to all the other growth stocks. And as I said, the RS line is decreasing somewhat, although it had a big jump here on this gap up day. And I like how it's holding this key 21 EMA. So once again, this is a start position, and I won't be looking to really increase my exposure on this until it really starts proving itself by moving up towards these all-time highs. So that is AMD, and next up we've got, actually that was Snap, and next up we've got AMD, and I sold half on this day because it was a downside reversal on higher volume, and then after the slight gap down, I got stopped out of the rest of my position on this Tuesday. But then you can see it retook the 50-day, although not on higher volume, and I entered on a similar setup here. Let's move over to this screen right here. I've got the annotation at 81.45 and 83.10 on this day. And overall, I entered off the teal dot setup as it took out the high of this day on Thursday. And I really liked the kind of risk reward ratio here to the 50-day moving average. And then I tried to add a little bit as it took out this high on this day right here, but you can see it did reverse, although on lower volume and still holding above these key moving averages. So it still might need a little bit of time to form out this base here. But once again, this is a starter position, and I'll look to add to this if it proves itself, or if it takes out these moving averages, I'll be out. So that is AMD, and these are my only 2 positions at this time, and once again, they're very small. And next up, we've got Net. So overall, going back to this screen, you can see I got stopped out for a normal loss on this Monday at 62.52. But overall, once again, this stock is holding up very well. You can see 2 inside days here as the overall kind of growth sector experiences a lot of weakness. So this is very high up on my watch list. And lastly, we've got Tesla, and you can see that I actually bought it on that Monday as it was acting very well, but then it reversed and hit my stop for a small loss. So once again, this is still tightening up. You can see I've drawn in these downward trend lines here, but overall, it's not actionable at this time until it retakes that 50-day and moves up on volume. But overall, I really like the kind of volume and price contraction here. Let's draw that in. So I will be watching this pretty closely. But that's pretty much a quick summary of all my trades from this past week. I hope you guys kind of get something out of this, and definitely it's a little bit therapeutic for me to talk about my losses and kind of work through them and think about ways I could have improved while making this video for you guys. So I hope you guys enjoyed it. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.